Good morning, everybody. Happy, what is today? Tuesday, isn't it? The Arctic announcer. Good morning. Man, whole lot of cold people in the world today. That's okay. That's okay. You guys remember this when you're bitching about the 100 degrees in the summer. Um, that's what I always tell my wife. Guys, this is going to be an educational room today. We are going to talk about educational things, primarily focusing on simplicity. I brought it from Washington. I may have. I may have. My wife is still working a little bit remote for the hospital in Washington, so I think they sent the weather too. Um, Guys, we're not going to call trades in the room. What we're really going to do, good morning, Cab, is we're going to focus on advantages. And one of the first advantages that I like to give myself every day is knowing when news is going to print, knowing when high impact releases may hit, so that honestly I can choose to sidestep and get out of the way and not be in the market when there could be this big crazy emotional reaction from people with way more money than me. Today is Tuesday, January 27th. Not a lot going on. We do have some medium impact at 10 a.m. The cheeseburger consumer confidence. President Trump speaking around 4 can always create a stir. But just putting it on your radar, writing a note, setting a reminder with Siri, a little post-it on the monitor, something to remind you that your patterns can be disrupted. We will talk about two separate platforms today. We're going to talk about NinjaTrader. A lot of you are familiar with that. And we're also going to talk about TradingView. I'm going to go ahead and say one's not better than the other. It's just two different ways to get the job done, guys. And the easiest way to get the job done is to learn how to read your charts. There's two things you can do as a trader, and one of them tends to set up heartache and woe, as my friend Hank Williams would say. You can chase the money, and there's a lot of money to be made in the markets, guys. But if you're chasing the money, you're typically, not always, I don't want a blanket rule, but you're typically abandoning the process that produces the money, which leads me to the second one. The second one is you can embrace and focus on the process that you'll be able to prove wins more than it loses, and that's called having an edge. And when you have an edge, you have an advantage. You have a pattern, and that's all it is. A pattern that you can prove wins more than it loses. So every time you enter the market, while you don't know whether you'll win or lose, because anything that wins 70 to 80% of the time loses 20 to 30%, but you can say, if I take this exact same trade 10 times, I'm likely to win 7 or 8 of those trades. And winning 7 or 8 of those trades, unless I'm just horrible at management, I should be able to walk away feeling pretty good about my day. So learn to read your charts. And both platforms come with trading plans. Both platforms come with checklists for entry. And both platforms are only 3 rules on 2 charts. So I'm going to drop those plans and the corresponding workspaces in the room right now, or spreadsheets in the room right now. I'm also going to go ahead and drop the PowerPoint that I used to teach every day in the room. We're going to focus on simplicity to recognize advantages, and then you guys will be able to make good decisions about turning those advantages into trades. And you'll find that patience is a virtue in day trading. The most difficult part, in my opinion, of day trading is sitting idle and doing nothing and watching a market move and feeling as though you're never going to get paid in that market because you're not constantly in it. Chart reading, guys, waiting for the advantages is about 90% of your day. Active trading is about 10%. But you're going to understand, you're going to be able to look at your charts, and it's really pretty cool how it works. You're going to look at your charts and you're going to say, man, I know which way they're going. I know where they're likely to go. If there's a fight, I know where that fight is likely to be lost. And your chart reading is going to let you know where the market is likely to continue to go to stop, and you're going to use these for entries, and you're going to use these for targets, and likely to stop when you've reached an area that could end a trend. You're literally going to say to yourself, hey, you know what? No more trades. I'm back in that 90%. Um, the market is, I guess, cyclical is a good way to put it. Repetitive. It moves, does the same darn thing every day. The market goes up or down. That's a fundamental truth. Trends go up, trends go down. Within that trend, very often there's a fight. There is a, whether it's profits being taken, whether it's someone trying to change direction, there's very often a little blip on the radar counter to the underlying trend. The methodology that we're going to talk about in this room for both platforms is designed to show you right where that little fight is most likely to be lost, and that becomes your entry for a trend trade. And if you can wait for that fight, you can take a trade that you can prove wins more than it loses. That's the edge. And when you learn the easy trades, when you begin to understand what it looks like to have the advantages, you begin to see more. You begin to see more patterns in the market. You begin to see more opportunities. You begin to see more ways to manage. And it all comes from building a really solid foundation. I'm going to start with NinjaTrader. We're going to work our way into TradingView, and then we're just going to mix the two together. But they are apples and oranges. So if you're with me on NinjaTrader, guys, make sure you're focused on your NinjaTrader rules. And if you're with me on TradingView, make sure that you understand those rules will be different than NinjaTrader. I'm going to break them down by platform. NinjaTrader first. And all we're going to do is we're going to learn the rules. I'm going to discuss the rules, the indicators that we're going to use. We're going to break the rules down individually, and then you'll be able to piece those rules together to create a trade. Simulation is not trading. Simulation is where you are building the muscle memory so that when it is time to trade, you don't hesitate. You don't have distracting thoughts, guys. Simulation is building the muscle memory to never hesitate when the edge is present. So as you simulate, as you learn the software, as you find your groove, post pictures in the room. This is the first step in getting where you want to be. And what's going to happen is you're going to post a picture in the room and you're going to say, hey, Mark, this is what I saw. So just hypothetically, this is what I saw. I saw this momentum, and this was only the potential to break, and I took my entry. And now that I've presented what I did and told you how I read my indicators, do me a favor. Talk about what you see. Let me know if I missed something. Point something out that maybe didn't stick out to me when I was in the moment. And we've got some good examples of that this morning when we go through charts. Because when you're thinking about profits, when you're thinking about stop movements, when you're thinking about the perfect entry, guys, when your plate is full with a trade and the adrenaline and maybe even the anxiety is there a little bit, we all tend to miss things. And missing things is okay. Making mistakes is okay. It happens every day. But what happens is when you make a mistake, accept it. It's a learning process. Mistakes and losses are a part of getting to where you want to be. But every mistake is correctable. And if you discuss the mistakes rather than sweep them under the rug, if you self-analyze and say, whoa, I messed this one up, and just that simple conversation with yourself makes you less likely to continue the path. So guys, post in the room and let's get the best feedback possible. And then keep it simple. As a brand new user, we're in kindergarten, which is a great place to be. The plans that I give you, whether it's NinjaTrader or TradingView, only have 2 trades on them. And if you don't learn the first trade, I can't say this enough, if you don't learn the first trade, the second trade on the plan will be difficult because it relies on the lessons from the first trade. These plans that I dropped in the room, guys, are stepping stones in your learning journey, and they're designed to teach you to read your indicators, to get you in tune with what the market is telling you so that you can decide that the market's giving you what you need. The trades in the plan are designed to optimize your chances of success. Confidence comes through that memory of success. So as the person helping you get to where you want to be, I want you to find success as often as possible. But I don't want you to shy away from mistakes. I don't want you to hide mistakes, guys. When you make a mistake as you learn this plan, make sure that you post it in the room, because through study, simulation, class feedback, and practice, you're going to write a plan that suits your needs. And the feedback in the room is going to help you identify the things that are holding you back from your goals. You've got to learn the looks. Every trade is a pattern. Whether it's the entry pattern, it's just the market doing what the market does. So we're going to learn to wait for that pattern, and we're going to learn to jump on that pattern when it's true. And the better you know the pattern, the slower the market seems to move. My promise to you, and my promise every day, is that by the time you walk out of this room today, you will have everything that you need to be successful with the software. The only things that I can't control are whether or not you post in my room and participate. I can't control whether you're tracking your stuff in a spreadsheet, whether you're taking pictures, whether you're annotating charts, guys. I can't force you to want to be good at this, but I will tell you, buying a hammer does not make you a carpenter. Buying software does not make you a professional day trader. Now it's time to put the work in to get to where you want to be. We're going to start on NinjaTrader. It's only 3 rules. When a rule is true, it creates an advantage. So it's 3 advantages that are the recipe for a trade. Those 3 rules happen on only 2 charts. You have a large chart and a small chart. Large chart is slow. It's a very broad stroke of a brush, guys. You will define the trend direction. You will establish the advantage of momentum, and you will make sure that there are no areas in your way. Rules 1 and 2 are met on the large chart first, specifically the first bar on the large chart. Within this bar is where you'll see that fight. So the rules are true down here on the large chart. The fight begins on the small chart. You will pinpoint right where that fight is most likely to be lost. You'll be able to use this as your entry for the highest probability trend trade. By using this refinement chart, you will be able to reduce risk and maximize potential. Big crowd, little crowd, guys. Big chart, big crowd, little crowd. This is who's running the show, and it's not you. Your large chart are the people in charge. They are large and in charge. They have the money, the charisma. They are great dancers and a lot of fun at parties, guys. They establish trends. They create the momentum that we look for. They react at the areas that could be problematic. Your methodology, your rules are designed to keep you in the loving embrace of the large crowd, because the large crowd typically wins. Your small chart, this is the small crowd. These are the fighters. These are the people that create that little push against the large crowd. We're going to pinpoint where their fight is most likely to be lost. You will be able to use that, should you choose to do so, as the entry for the highest probability trend trade you could ever take. We're going to use 2 different indicators. Areas is the first one, and I use this as a blanket. Areas are horizontal lines. They all have names. Areas are horizontal lines on a chart. Horizontal lines on a chart can produce bounces. Write that down on a piece of paper. Lines are bouncy. Areas are bouncy. You call the large crowd Marge? Large Marge. It was a night just like tonight. Guys, you're going to see divergence, highs and lows, resistance and support, yellow 1-to-1s. Let's simplify. If the market is moving up and hits a line, that line is resistance. And if the market is moving down and hits a line, that line is support. So the market is constantly in a state of moving to and from resistance and support. Now, trigger lines, these are the ones I want you to pay attention to. I'm going to go super in depth on the creation and how they come together and the mathematics and all those things. And these are small and these are large. That's it. That's all you need to know. Small triggers, large triggers. 2 solid lines work together to create small triggers. 2 dashed lines work together to create the large triggers. When they're green, they're up. When they're red, they're down. That's as technical as you need to get with these things, guys. We're going to use trigger lines to define momentum, making sure that we have the first advantage in our trade rules. We're going to use trigger lines and make a comparison to these lines and those lines. And that's going to define termination conditions and give you a very clear picture of areas that could stop the market. We're also going to use the large trigger lines to define our perfect entries. So triggers show up in everything we do. And some have said, we're just learning to read trigger lines, Mark, because the trigger lines tell the story. I agree 100%. Let's break it down. Rule number 1 says that the large chart must have strong trigger lines. Strong trigger lines create the advantage of momentum. Momentum means that you have a market that's going to be very difficult to stop. So strong trigger lines are a pretty easy lesson. I haven't done this one in a while, so we'll do it this morning. Strong trigger lines, what it means on the most current bar is if your small triggers in an uptrend, hey, my pen's not working, hold on. In an uptrend, when the background is green, if my small triggers break away and above the large triggers, it looks like scissors that are open. And it doesn't matter if it's a little bit of space, and it doesn't matter if it's a lot of space. If the scissors are open, if there's separation between the small and large, you have strong triggers. In a downtrend, smalls break below the large triggers. Large triggers must be wide, angled in the direction of the trend. Once again, scissors are open, whether it's a little bit of space, whether it's a lot of space. We don't gauge, we don't rate, we don't sort. We just say, and here is your cheat code for strong triggers. Separation is strength. That's it. And when I have those strong triggers, the odds are favorable for the market to continue up in an uptrend or down in a downtrend. This is the look that we rely on as we're looking to break key Fibonacci areas. This is the look when you have that strong trigger look where you're going to find ways, look at that smalls below the large, space between, you'll be able to find ways to capitalize on that advantage when the path is clear. And thank you for that, Ron, good timing. And guys, when separation goes away, so does strength. So let it be very black and white. If they are strong, rule number 1 is met. If there is no separation and they are weak, rule number 1 is not met, guys. And when rule number 1 is not met, it's cool to do nothing. That's part of your 90%. There's no reason to go look for rule number 2 as a brand new user. Everybody good with that? Separation is strength? That's a pretty easy lesson. Has nothing to do with Fibonacci areas, has nothing to do with price bars. It's simply one look on trigger lines. Let's look at a live market and see if we have strength. Is that it? That's it. Smalls below the large, space between, rule number 1 met. That's it. That's how easy it is. And once rule number 1 is met, we'll go to rule number 2. Termination conditions false. No area is likely to stop the market. We want room to profit targets, guys. We're going to call it a clear path. A termination condition is a Fibonacci area that could stop or reverse the market. That's the technical term. Lines on a big chart, guys. Lines on a big chart. If the market's going up, it can be resistance, divergence high, yellow 1-to-1s. If the market's going down, it can be support, yellow 1-to-1s, divergence low. This is where the large crowd, where the people in charge, this is where they make decisions most likely. This is where the buyers buy and the sellers sell, and where the two forces actually fight one another for supremacy very often. So in order to identify a termination condition, 2 things have to happen. Good morning, Miss Adriana. The first thing is that price bars reach an area. I don't care if it's resistance or support, the recipe is the same both directions. Price reaches resistance. Price reaches support. All you have to do is say, where are my triggers? We're going to count triggers. Once price reaches the area, we're done with price. We don't need it anymore. It has nothing to do with the equation. Your trigger lines will tell you everything you need to know. If all 4 of those trigger lines, both small lines, both large lines, remain below resistance or above support, it is a termination condition. It is an area that could stop the market. It could create an untradeable bounce. It could create a reversal. It could break. I'll never know what it's going to do. So if price reaches and 0 triggers get through, rule number 2 is not met. absolutely no trades into the area. If price reaches Fibonacci support and my trigger lines remain above, absolutely no trades into the area. Do you guys see it? That's a termination condition live in the flesh right in front of you. This is an area that could create a bounce. This is an area that could create a reversal. This is an area that could change the entire direction the market was going and send it the other direction. And what you're going to find is that divergence lows work, and that one-to-ones work, and that Fibonacci resistance works. And over, you'll be able to pinpoint where the market may stop and bounce using that simple recipe. Price reaches, no triggers, no trade. But areas break. That's one of the options. And you're going to see it a lot, guys. And when areas break, it actually creates a little opportunity. And it looks just like this. This is your order of operations. Price reaches the area. Where are my triggers? Well, all of my triggers remain above support. I choose, because I'm in control, I choose to sit on my hands and wait for the reaction rather than try to predict. If my small triggers absolutely smash through that area with momentum, I can say to myself, hey, this is an area with the potential to break, but it's not broken. I'm going to have to manage any trade I take assertively. I'm going to have to get to a zero loss level. I'm going to have to take faster profits because this is not the perfect trade. In the plan that I give you, you're going to find ways to capitalize on the potential to break. In the plan that I give you, 2 triggers is not enough. You want that third trigger line coming through. You want at least one line of those large triggers coming through the area. That's your highest chance for a breakout. And on the checklist for that medium probability, likely to break trade, potential to break trade, that's the first requirement. Once all 4 trigger lines, not price bars, has nothing to do with color changes. Once all 4 trigger lines get below that area of support is broken. It becomes resistance. Your path is clear. And your path remains clear until you reach the next area. And as soon as you hit the next line, dag nabbit, we're right back to number 1. We're sitting on our hands. We're waiting for the reaction. So what we're really going to do to define terminations and potential and clear paths, we're just going to count triggers. It begins with price reaching the area. Once price gets there, I'm done with it. Price reaches Fibonacci resistance. None of my triggers have broken. I choose to sit on my hands. There's no reason for me to trade into an area that stops the market more than it doesn't. If 2 of my triggers break through with momentum, it does have the potential, but if I am following the KISS plan, I am not looking for my trade yet. I am cheering on the large crowd and waiting for 3 of the 4 trigger lines to get above resistance. When 3 of 4 trigger lines, the breakout is more likely to happen. But when 4 trigger lines break through, my path is clear, guys. I'm in the good stuff. I'm excited. I've got momentum. There's nothing in the way, and I'm looking for an entry, guys. That's the best of the best. There will be times. There will be times, a somber note, when areas are stacked. There will be times when momentum isn't present, guys. There will be times when you just can't seem to get your rules met. That's 90% of your day. 90% of your day is sitting on your hands doing nothing. And what you're going to find is that 90% of the day is keeping you from avoidable losses. That 90% of the day is keeping you from embracing opinions and gut feelings. And it really does. It tends to keep you out of an awful lot of losers. And it's okay because the futures markets trade on average $220 billion hourly, collectively. The S&P, most of you trade the S&P. That trades about $174 million a day as exchanged. It takes $400 a day to find a 6-figure income, guys. So what we're focused on for the brand new user, and honestly, for the success-driven trader, is finding the easy trades. And this is what they look like. When there is momentum, when you haven't reached the next area, that tail is the fight. We're about to learn how to pinpoint where that tail is most likely to be formed. You can use that tail to go back and study, actually. With momentum, nothing in the way, that tail is the best of the best entry, guys. Trading away from Fibonacci, trading to Fibonacci, and just capitalizing on those advantages right in the middle. Is everybody good with rules 1 and 2? Strong triggers has given us momentum. When you have momentum, that market is difficult to stop. It's even more difficult to stop when there's nothing in the way. Awesome. We're going to define an entry, guys. Rule number 3 is so stinking good that you're going to use a limit order. And you're going to buy or sell a pullback, which is that little fight. And you're going to do it at an area because areas are bouncy. Fibs, midbands are yellow 1-to-1s. Learn the list. Pink 1-to-1s and divergences are not on the list. Dun, dun, dun. And that area has to be inside of triggers. Inside of those large triggers on the small chart, because that's going to show you where the retracement's going. Your entry is a pattern. It's a repeatable pattern. It's a testable pattern. It's a provable pattern. And every trend trade you take is going to look like this. When the large chart says up, when the large chart has momentum, and when the large chart has a clear path, and I lean on when the large chart rules are met, because if the large chart rules aren't met, small chart's going to try and talk you into some nonsense, guys. Everything is going up. The fear of missing out is real. The fear of being left out is real. And then that reversal bar prints on the small chart. And that reversal bar is the beginning of the fight. Now, to define the pattern, I say wait for the reversal bar. But to be really honest with you guys, if you actually learn the phrase, buy or sell a pullback in an area inside of triggers, you'll know where your trade's coming from long before the reversal bar ever prints, and you'll wait. The reversal bar says the fight is on. The large triggers, there are 2 large triggers on the small chart, big chart, little chart, doesn't matter which is which. Guys, smooth is small, stepped is large, but these trigger lines define where the retracement's most likely to go. Somewhere from the top line to the bottom line. I don't know. Anywhere in there, I'm still in the good graces of rule number 3. But trigger lines aren't bouncy. Trigger lines don't create ricochets. Trigger lines never stopped a rogue water buffalo. I don't know. Areas inside. Fibs, midbands, yellow 1-to-1s. That's what's most likely to create the bounce. And when it's in that retracement zone, it's perfect. Sometimes there's multiples, guys, that'll create a window. Call it the window of opportunity. You're going to activate your limit order at the highest point of support, closest to the reversal bar, because the large chart is screaming up, and the large chart has nothing in the way to create a bounce. We're not going to stumble over a couple pennies trying to save a few dollars. And here's one of the hardest things for new users to get their head around, is that when you enter the market right here, rule number 3 is in full effect, and you have the full on advantage of this methodology. And if it pushes below your entry a little bit and you're down 50, 60 bucks, you are still in rule number 3 and you still have an advantage. And if it goes down to the next area, you're still living the good life, guys. We're good. We're not always to the tick good. And if it even goes all the way to the bottom of the retracement zone, guys, you still have the advantage of rule number 3 in play. Your advantage goes all the way to that bottom line. But because of the advantages on the large chart, we're just a little higher. And because you can pinpoint with precision where the market is most likely to bounce and continue with the large chart, your KISS plan says that stops will go 4 to 5 ticks below the large triggers. This is where the market should not go. This is where rule number 3 is no longer in play. This is where your 20 to 30% kicks in. This is what we call an acceptable loss. This is what we call a good loss. This is just a cost of doing business, guys. And I want you to be okay with the idea that losers, when the rules are met, are not failures. They're just good trades that didn't work out. We can minimize our risk by using great entries. We can minimize our risk by not putting stops 50 ticks below things, hoping it works out. Because once you get 4 or 5 ticks below those triggers, you just don't know if, when, or where the market's going to continue back up, which means you're going to learn to ignore lines beyond the triggers. They are not used for entries in the KISS plan. In a downtrend, Large triggers are showing you strength on the large chart. There are no termination conditions on the large chart. And the small chart starts the fight with a reversal bar. At the time of the reversal bar, you know where the retracement's going because of trigger lines. You know where it's most likely to bounce because of the area within. And you're developing the courage through repetition, study, and practice to activate your limit order just below that lowest point of resistance. That's the best of the best entry. And you will see people like a sniper selling high ticks sometimes. That's where the market is most likely to continue down. I like this right here. I wish I hadn't hit it. You got a reversal bar, and it never made it to the entry. And a lot of new users will jump in fearful that the market's going without them, and then they magically come back and grab the people that were patient. It happens a lot. Stops go 4 to 5 ticks above according to the KISS plan. Any lines beyond the triggers are the wrong side of the triggers, not where rule number 3 is any longer in play. And guys, what we just talked about, the 3 pieces, put together the perfect recipe for a trade. The perfect trade is momentum, path, and entry. So if I have momentum and at least the potential to break, I'll turn my attention to the smaller, faster chart. I'll activate a limit order just above the highest point of support. And if the market comes back and reaches me, I've got a 70 to 80% chance typically of it going up and finding success. Now, on a large chart, that little fight looks like the bar pooped out a tail, right? Or a wick, whatever you want to call it. We don't trade these tails because by the time you know it's a tail and not a reversal bar, the market's gone. We rely on that refinement process to pinpoint right where this tail is most likely to form. And this is kind of cool. It's all kind of cool, honestly. That's the large chart right here. Let's go see if we can find one of those tails with the rules met. That's a pretty good example. Odds favorable momentum. It came close, but it didn't reach support. And there's that tail. Does everybody see it? That's your look on the large chart. Now, it'll look like that when it's time to take the trade. Price has not reached resistance. The momentum is strong. What is that, 4:26 a.m.? Boop, 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 boop. And your small chart is going to look like this. And I want to show you how amazing this methodology is. And guys, I'm a big language nerd. I'm going to tell you right now. The language of entry, and I want you to write this down. I want you to keep this in front of you, says that you will buy a pullback. And you will do it at an area. And that area will be inside of triggers. Everybody remember that magical phrase? Buy a pullback at an area inside of triggers. Why is that important? Because before the reversal bar ever prints, I know exactly where my triggers are. And before the reversal bar ever prints, I know exactly where my areas inside of triggers are. And before the reversal bar ever prints, I can have a limit order waiting right at the area inside of triggers. And if I get the reversal bar and if the market comes back, I'm in the perfect trade. I'm in a trade with momentum. I'm in a trade with a clear path. I'm in a trade with room to trouble, and it's still in the zone and I don't panic. And it's, oh, there's a reversal bar right off the zone to the freaking tick. Oh, they came back just in case you didn't get filled, and off they go. And guys, this pattern right here is the keys to the kingdom. This pattern right here is the golden goose. When you learn this pattern, you'll begin to see more. And that's the low move of that pullback, and that's the bottom of the tail. So you can go back and you can start circling these tails, squaring the tails, I suppose. And if it pulls back to an area inside of triggers, I'll be damned. There's the pattern again. There's the pattern again. All it is a pattern, and it's a pattern that repeats itself. It's a pattern that's predictable. It's a pattern that's testable, and it's a pattern that's been proven to win more than it loses, guys. That's called having an edge. Are there any questions? And that was crude oil from today. That wasn't me hand-picking stuff. That was literally the same pattern. 11.625. The same pattern. 2021, the same pattern. 2022, and if you start scrolling through that spreadsheet that I dropped in the room, there's like 400 pictures of the pattern. And that one's no longer available, which is a dirty trick by Master B. So we'll do this one. Momentum, path, look at him, boom, boom, boom. Pull back to the area right at the bottom of the triggers. Easy money. That's the same pattern. That's the S&P. That was in 2025. That's coming this year. So guys, learn the pattern, make trading easy. Keep the stress out of it. All good? Quiet class today. I love it. You guys are amazing. We're going to go to TradingView. TradingView is not NinjaTrader. It's important that you remember that. TradingView takes 3 rules to make a trend trade happen. TradingView uses 2 charts to make the trend trade happen. Now on TradingView, we're using minute bars, not dynamic Renko bars. And these are way slower. A lot can happen in 15 minutes on that large chart. So when you look at your large chart, you'll notice that there's no large triggers. It's just too much noise. We don't need them. It's too slow. There's also no background colors, just things that don't need to be there. When I put together this plan with John Novak, I stripped the workspace of everything that doesn't create an advantage for you. We've gone bare bones for simplicity. Your 15-minute will define direction, momentum, key targets, and termination. They are the large crowd. Your 1-minute, the small chart, will show you the fight, define the immediate strength with the small triggers, and you will pinpoint exactly where that fight is most likely to be lost. We're going to use triggers. These are your small triggers, cyan and white, up and down. On the small chart, you'll have small and large because the second trade that I give you on the KISS plan is a momentum style trade, and you can't take a momentum style trade without having the advantage of momentum. We're going to see a good example of that today too. And areas. Does anyone else think areas are bouncy? I know it sounds ridiculous. He's a grown-up. Why is he saying bouncy? Because it sticks, right? Areas can create a bounce. Big chart or little chart, guys. We're going to use them for targets, terminations, and entries. And we're going to do it with only 3 rules for the trend trade. I think TradingView goes a lot faster. I really do think TradingView is a very easy platform to find success on, but you do have to be patient. You will define the trend. That's the first step. And then rule number 1 says don't trade into areas. We go back to that idea that a clear path creates an advantage. And then on the 1-minute chart, you're going to make sure that you won't be trading into any areas on the 1-minute chart. Clear path, both time frames. And then you're going to buy or sell a pullback at an area with a close on the weak side of the triggers, guys. That's your 3rd rule. Pinpointing right where the market is most likely to fail its little fight and giving you an edge up on getting in at the right time with that close on the weak side of the triggers. So defining trend. This is the easiest one. If the small triggers on your large chart are up, your trend is up. Looking for rules to be met for high probability trend trades, up is the best thing to do if you're following the plan. It's the only thing to do if you're following the plan. If the triggers are down, you're in a downtrend, guys. Define your trend. Rule number 1 says 15-minute not trading directly into areas, which means that when I open up and I look at my chart and I say my triggers are down, from wherever that bar is, do I have room before I smack into something? Guys, I do. I've got all the room in the world before I hit something solid. That's what it looks like when rule number 1 is met. And when rule number 1 is met, you've got room to make money. Rule number 2 says that from wherever you take your entry, that pull back to an area inside of triggers, you can't trade directly into a brick wall on the 1 minute. You have to have room to make money. That's what the rules say, not what I say. Everybody has a different idea of what room to targets means to them. Some of you are cool with 40 bucks. I don't react fast enough for $40 worth. My own personal life, I prefer 100 minimum because if that area creates a bounce, I want to be able to move my stop losses. You'll have to define what works for you, but I can tell you without hesitation, Trading into resistance very often produces a bounce. Trading into one-to-ones very often produces a bounce. Resistance, a bounce. One-to-ones, a bounce. Resistance, a bounce. And guys, this is something that you can pretty much bet on. So you're going to have to be a little patient sometimes. This is your entry pattern. When the large chart has defined my direction, when the large chart gives me room to trouble, when the small chart gives me room to trouble, I'm gauging the room to trouble from where I enter, not from where the market is. And I think that's a lesson we need to figure out real quick. Here's the verbiage. When my small triggers roll against the large chart, if my large chart triggers are up, I need my small chart triggers to roll down. If they don't, you're not taking a trend trade probably. Once they roll, I start looking at every area below those triggers, whether it's this area of support, this mid-band, these one-to-ones, or these one-to-ones. And when price reaches, I don't just jump in. I wait for an up bar, a green bar for a long trade, and the corners of that bar must finish, the end of the bar, the end of the timer, the countdown's done, must finish above those small triggers for a long trade. That's the weak side of the triggers. Small triggers are the immediate strength. Area creates the bounce. Close above is where the market is most likely to reverse in the direction of the large chart. Notice how we never get a close above at the first area. That's not your area. We get to the second area, we don't just jump in because it could do the same thing as the first, but the up bar with the close on the correct side, that's your entry. Miss Adriana, have a wonderful afternoon. I'll smile big when I review them for the video. So it's just a pattern. And I really like to stress that. When my small triggers are up, I know that my trend is up. I'm choosing to take long trades. When there's room to trouble, I know that there's nothing in the way to create a big ugly bounce. Then and only then do I go to my small chart. I wait for my small triggers to roll. When they roll, I start looking lower. There's my first area, yellow one-to-ones. When it reaches those yellow one-to-ones, I don't just jump into the market hoping that the area holds. My entry is an up bar where both corners finish above those small triggers. That's where the market is most likely to reverse and continue with the large chart. You'll notice that they tried to fake you out, not from an area. This happens a lot, guys. Little fights on the way to the best spot. Make sure you know the rules. Pull back to an area, then a close on the correct side of the triggers. In a downtrend, same thing. Triggers are down, I'm going down. Room to trouble, can't wait to go to the small chart. Because the small triggers roll up, I wait for the pullback to the area. I get in with the close below the triggers. Reversal bar down, red bar, down it goes. Now, some of you are saying, but Mark, it already hit support. I've got room to support from where I'm entering the market. I've got room to get to trouble from where I'm entering the market. That's the most important part. This area of resistance is what gets me back to my entry. This area of support is what gets me back to my entry. And then guys, you can start the management process before you ever leave the large chart. I'm going to share this with you. I'm going to encourage you to learn it. It'll keep you from hoping a lot. Management starts with a comparison of the most current price on the 15-minute. There it is. And you're just going to say, okay, those small triggers that define trend, where is price in relationship to those triggers? It's either left, right, or inside. That's it. Those are the only options. Uptrend, downtrend, left, right, or inside. If you are left of those small triggers, you are on the strong side of the small triggers. That's where 1-minute areas are most likely to break. That is where bigger moves typically come from. Just a heads up, if these triggers haven't fully pinched and rolled and started a new bar down, they're still up. You're not on the strong side of them, beneath them. When you're beneath them, you're on the weak side of the triggers. This is where reversals tend to come from. That's why we use it for entry on the small chart. Because the large chart is so slow, it doesn't make this trade any worse than the strong side. Because in this big slow chart, you can go from weak side to the middle to strong side inside of one bar. So we're just using this to say, hey, if I hit a 1 minute area, that area is more likely to create a bounce. I'm going to get my management hat on. Maybe I'll get paid at the area and just wait for my next opportunity. If you are in number 2 here, the transition, that's where you're aware of those 1 minute areas. Maybe you're taking partial profits, getting to break even, seeing if it wants to run further. That's your maybe splits, big moves, GTFO, wait for the next trade, guys. If you learn that, you'll understand exactly how you're going to manage the trade before it ever happens. So the triggers are down. I'm actually on the strong side of the triggers. Price pulled all the way back to resistance. Still hasn't given a close below the small triggers. And if this one closes below the small triggers, it simply has nowhere to run. There's just no room to targets. And this is one of those instances where I'm going to say to myself, it's just not my trade. I'm not going to worry about it. My money is worth room to run. Dun, 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 dun. Smalls are trying to break above the large, but the large are flat, not a lot of giddy up there. Remember, they have to be open and wide. That's part of the language that gets you into it. There are areas inside of triggers. You do have a clear path. If you took this trade, it would fit into what we call a medium probability trade, where the momentum isn't perfect, but the other two work out pretty nice. And that's why we talk about advantages. That was a good segue. The perfect trade, the ideal trade, guys. The first 30 days with the software to really build confidence and get in tune with these advantages. The perfect trade, the high probability trade, is momentum, path, and entry. All three 100% defined by the rules. This is not the only trade, guys. This is the trade that teaches you to see the other trades. Because when you look at your chart and you say, hey, as we just did, the momentum isn't perfect, but I do have a clear path and I can define an entry area. That's a medium probability trade. Now, the difference between high probability and medium probability. High probability means that each indicator on every chart agrees with the rules for the trade. This is perfect. And medium probability means that most of the indicators agree with the rules for the trade. However, an issue, singular, exists. And those trades must be managed a little more assertively. Most of your trades will be medium probability trades. And then if you look at your chart and you're like, well, I don't really have momentum and my path isn't clear, but that entry area sure looks nice. Guys, you're in low probability. This is like recipe for disaster. You're in control of the entry, only you. So when you know what's working for you and against you, guys, it's going to help you make good decisions. Trading isn't about a desire to win. Trading is about having an edge, an advantage, where I say, because of the advantages in front of me, I can go back, I can circle tails, I can guarantee that this pattern wins more than it loses. That creates an edge, that creates an advantage. And then because trading is my business, I choose to only trade when an advantage is present. And guys, that's my first hour. It's the first hour every day. If you go back and look at my videos, you're like, oh my gosh, this guy says the same stuff every day. So what have we done? We've learned the rules. I've presented them for both platforms. And because I've presented them, because I've broken them down, because I've given you plans, because I've handed you the PowerPoint, if you have a misunderstanding of the rules, guys, I really need you to have a conversation with me. I need you to say, Mark, I've heard you say momentum 1,000 times. Seriously, what the hell are you talking about? I'll clear it up for you, I promise. Now it's up to you to simulate and to practice and to learn how to follow rules and learn how to recognize and learn how to get into the right trades and not practice the wrong trades, to create the muscle memory for when it's time to go live and to keep it simple. One of the challenges that I see in this room quite often, and this is going to happen in the second hour. Well, Ron took a trade that isn't a high probability trend trade, and Pete took a trade that isn't a high probability trend trade, and Aaron took a trade, and Trina took a trade, and Victor took a trade, and why the hell is Mark telling me that I can only take high probability trend trades? Guys, I'm not telling you what to do. I do not want to be the boss of you. I'm telling you how to get to where you want to be the absolute fastest with the fewest roadblocks. Once you figure that out, you get to start doing more if you choose. Or you could just say, wow, I'm making more money than I need with the very simple. Why would I change? Keep it simple. Keep it focused. Learn the looks, guys. I've done my part. Now it's up to you to do yours. And all that is posting in the room and asking for feedback. And that's what we're going to do for the rest of the day, guys, is I'm going to look at the charts that you posted. And I'm going to give feedback on momentum, path, and entry on the basic rules. And if I see something that I think will prove helpful, I'll point it out. That's all it is. 10K morning, not the same stuff every day. This wonderful guy says the same stuff while he's sleeping, and his wife still loves him. Yeah, my dog gets excited with strong triggers. I say it out loud when I trade. I do. I talk at my screen audibly. Because when I talk about my rules and I say it out loud, I believe that the advantage is there. And when I say, man, I just don't have a clear path, instead of thinking, I wonder if it'll break, I just don't have a clear path, I'm less likely to take the trade into that red line. And yeah, for whatever reason, my wife does still love me, 10K. I'm a lucky guy. I'll leave you guys with the S&P, guys. I'll be back in like 3 or 4 minutes. Do me a favor. If you're on NinjaTrader, study that picture. That's how I need you to annotate it so I can give you the best possible feedback. If you're on TradingView, look at that picture. This is how you're going to get the most out of me every time. You got to tell me what you see so I can make sure that you're seeing it correctly. And Ron, you are absolutely right. She does like you best, which bugs me a little bit because she's never even met you, but she's pretty sure you're a cool cat. So, guys, I'll be back in 5. Go stretch your legs. All right, guys, second half. So here's what we're going to do is I'm going to scroll up to the top and I'm going to find all the pictures that are posted. I'm going to click on those links and we're going to talk about them. If for some reason I accidentally miss a picture, please don't let me get away with it. It's never intentional. I always want to make sure you get the feedback. As I click on them, there was a comment next to the daily results, and someone said, oh, my daily results were $450, pure septic tank. And I love that. Guys, when you really get in tune with the software and you understand what it's capable of, you will be pissed off at about at $400 days. But you've got to get to a point to where you know what produces those days. And once you understand what's creating the money that you want, it's just a matter of waiting for that thing to show up. So, oops, did I do the same one? I did do the same one there. Hold on. There we go. And it's kind of a liberating feeling. All right. So we got about 25 here, and I guess Wayne started out. Maybe that was Wayne, maybe that was Paul. I don't know. I think that was Paul. Winners and losers. That's awesome. Winners and losers. They both happen. Nothing in the way on both charts. Triggers up. Pull back to an area. Close above. Out at trouble. Perfect trade. Perfect trend trade, Paul. I don't even know if he's in here. He might be taking a nap. Triggers are up. Room to trouble. Look at what he had to sit through. All of that. Close above, no room. Super patient. Close above, giddy up. Let's make some cash. Nice job. $15 triggers are up. It's on the weak side. So 1 minute close above the triggers. That's not a trade there. So what that is jumping in, hoping it goes, to be honest with you. Hey, what's up, Jennick? This was your pullback. And then there was your close above. And it's a weird because there's all these areas. And it's a late entry. It's jumping in with the advantage of momentum. Everything's going up. And he gets paid right at trouble. Nice one again, Paul. 15 minutes up, clear path, pull back to the area, close above, get paid. Beautiful. Paul putting on a clinic today. Trend trades happen. You just got to wait for them. You like that, Jennick? I can teach you. I can teach you. All right, let's see what we have here. The trend is in the transition zone. So trend is up, transition, and it's inside of the zone, I guess is what we're saying right here. From the small chart coming off of that 58 termination, there's a huge breakout bar, an open of the next bar below the HVA, which is an awesome pattern. Wayne recognizes it and takes that all the way down to trouble. And Wayne, this is perfect execution. Starts as a termination on the big chart, waiting for your pattern on the small chart, taking advantage and not getting greedy, getting paid right where it should be. Nicely done, Wayne. All right, now this is the one I had a little, I noticed something on, and you guys may notice it too. So the trend is up, and it's the strong side of the triggers, and he has room to trouble. And then, guys, we ran into something here where the market did pull back to support. You can see it behaving as support right here, but then it breaks below. And what that does, when you get a full bar below an area that was support, it turns that area into resistance. And Wayne takes the trade, but he's literally taking a trade with price only peeking its head above an area of resistance, not from an area of support. And this is what we call a prairie dog. And the market did push up, and then it collapsed right back down. And it's this prairie dog, and this being resistance, could have a lot to do why it didn't hit his targets. Now, he's still protected and was able to make a great deal of money on it. But that was something that he said he didn't notice in the moment, that his support had become resistance, and he broke that rule, trading the prairie dog. And then this is the exact same thing. Here it's support, and he's absolutely right. This is support, but this is resistance. And it goes up, and it doesn't become support until this bar prints. And he's able to pull a little off here, which is nice. 750, gold moves crazy. And look what it does. Since it hasn't become support yet until there, it actually comes back and tests that one. If the wick is still on the zone, would that still be considered turning from support to resistance? So what we're looking for, Pablo, good question. Good question. It has nothing to do with the wicks. What we're looking for, and I've just done a lot of study on this, is I'm looking for a full body. 2 corners up, 2 corners down, away from the zone. Full body. So we're looking at those bodies. That's a good question. What you'll find a lot of the times is the wicks tend to sit in the zones. It's weird how that happens. But if you get that full body, then we'll switch roles. Good question. And this is the same thing, because maybe this was behaving as resistance, doesn't get the follow through that he was hoping for. They were coming back to test it as support. These are subtle. And when you're in the moment, you may not notice those things. When you're in the moment, you might be so focused on something else that you miss those little details. And I think that the conversation, it's not, damn it, Wayne, why did you do it? It's, hey, did you notice this? RK, when you say how many MNQ allowed, I'm not going to put any restrictions on you. Are you talking about in the funding company? You would want to go to the instructions. Dun, 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 dun. And it depends on the size of the account. But it's all right here for you. So depending on the size of the account is going to depend the number of contracts that you can trade. Whether it's large or small, this is set by amp. So if it's 25, you can do 5, 10 on a 50, 12 on a 75, 14 on a 100, 17 on a 150. There you go. And here's a link to it just so that you can go through and reference if you need to. So it depends on which side you're trading, or which size you're trading. In the zone. These aren't the droids you're looking for. I love it. Guys, if you're using these supply and demand zones, when you're right in the middle of them, you typically see a lot of consolidation. Wayne's recognized that. Wayne's utilizing that as an advantage to stay out of the market, because it's difficult. When they don't know which way they want to go, it's difficult to latch onto them. And great awareness there, Wayne. Price is pulling back, triggers are down, market pulls back to a mid-band, closes below, and it looks like it was making it. And 15-minute triggers down at the zone. But the entry was up at 83 up here, room to trouble. Okay. Or maybe it's a lot for some people. RK, do what's best for you. That's I don't give trading advice, but do what's best for you. If you want to trade more, get a bigger account. It's like saying there's not enough pasta at this Chinese buffet. So this is Chart Prime, Janik. And Chart Prime is a third party. It's not Nexgen. And they do supply and demand. And I'll tell you what, I am 100% in love with mine. And when you take those awesome areas and a couple simple rules that we teach in this room, it's deadly. It's good. It's so good. And this is one of those instances where I can say there was room to trouble. You probably could have taken that trade, managed it. All right, let's see what Pete did. Market reversed out of nowhere. Triggers rolled down. separated, odds favorable momentum. Pete, are you with me in here? Not a clear path. So guys, there's this idea called the gap theory. And it's what we use to define a midband on the large chart as a termination condition. And what it means is that if price accelerates away from those large triggers and hits that midband, they're more likely to close the gap back to those large triggers. And that's what defines a midband as a termination. So Pete, you actually took a short directly into a termination condition, and it did in fact close that gap. But because of your understanding of the software, stop placement was perfect and you're still able to capitalize. We don't trade, RK. You guys trade. This is an S&P trade. The previous trade was a NASDAQ trade, and the next trade, it looks like, is a crude oil trade. So what I teach in this room, the patterns work on any market. You just got to find what works for you. And then when I look at the live market, I typically look at crude, S&P, NASDAQ on TradingView. But again, the patterns are the same. Pete says strong bottom, termination that reverses the market. Strong trending market, but Pete, one of the things is when you're inside like this, it hasn't really designated itself as a strong trending market. We're looking for that train track, but what you do have is a market that's cranking. It is 30 bars, but there's a look, and I think a lot of you guys have shortcutted and just gone with 30 bars, but it's that train track look. It's that small riding the large. That's your strong trending market, and it's the strong trend that creates that effect. 30 bars is still a good look, but I do have to say that the triggers are weak. You don't always get it. Clear path. Here you jump in. You've got momentum on the small chart. Makes sense. Get paid. Get out before things get bad, and come back and take it as a trend trade and go get the rest of your money. Nice job. I believe this is Wayne. So this is that idea where it could go down unless the market goes up. So we're going to say down. Strong side. Room to trouble. This is support. It becomes resistance. Market pulls back to resistance. And you never get a close on the right side of the triggers. So it's not a trend trade. And then Wayne self-analyzed. He said, man, I didn't have the momentum to take a momentum style entry. And this is one of those things that you guys are going to recognize after the fact sometime. You'll be like, uh-oh, I thought I had a momentum trade. When I go back and look at it, I didn't really have what I needed. How could you take a momentum trade without momentum? And it didn't work out for him, and he gets stopped out. And great self-analysis, guys. Going back and figuring out what went wrong based on your rules really helps. The trend is down, strong side, room to targets. There's the momentum trade that wasn't, but that's okay. They came back, hit the midband, give him a close below, and he enters with the close below, and maybe the next picture is the next. Boom. Easy peasy. Making it down. Good job. Pulls back, closes below, initial stop, take it to trouble. Great trade, beautiful trend trade. Triggers are up, strong side of the triggers, a few points to the outer band. I don't know where you entered, 32. Yeah, you had some room to get there. Resistance, support, resistance, still resistance, still resistance. You take the prairie dog, Victor, and then what does it do? It comes right back, makes it support, comes and tests it, and gives you a close above the triggers right there. That's actually a better entry with more room to targets. Do you see it? It's like 60 bucks per contract different. Guys, this is what we call a prairie dog. And a prairie dog means that you're letting a bar peak above an area that's not what you need to take a trend trade from. So, for example, a long trade coming from resistance or a short trade coming from support. And it's wild how the market moves. It does come back to that support. It does close above, and it does do everything. And you just kind of had to sit through there, and it was close. They almost got you. Nice trade, Victor. I pay a lot of attention to that now. Is the area I'm trading from actually support or resistance? And I'll tell you, it keeps me out of a lot of mistakes. Triggers down, strong side, room to targets. I love the self-analysis. So the VWAP is a termination condition. It also means, Wayne, that you were trading inside. There's nothing but trouble here. So I don't think you just had any room left. And Wayne says, man, that was the trade. That's the one that I should have been in because it gave me room to that wall of nonsense below me. And that was the dang it, I didn't get my best entry. I'm going to give it a try anyway. And they were done. They hit the VWAP. They hit the 1-to-1s. They hit the divergence low. They're above the bottom of the zone. And man, it's just, they went up quick. This would be what we call a mistake. And mistakes happen every day to all of us. So I like it. Wayne doesn't just say, damn it, market hates me. Wayne says, let me go back and look at this. Let me make sure when I'm not in the middle of a trade that I didn't do something wrong, that I didn't miss something going on, because when I see this same look next time, I'm going to be even more prepared. And I'm telling you right now, guys, self-analysis is going to take you to the promised land. So Wayne, I don't know if you're going to watch the video lately, or Trina, if you just see him, high five him for me. Great job. 15-minute down, transition, room to trouble, pull back to the area, close below, and those sons of guns. Paul, they did you dirty, man. They did you dirty. They got so close and didn't fill. Has anyone else ever had that problem? Like it hits it, doesn't fill, misses it by a tick, doesn't fill. One of the things you can do, and this is just me, so if I'm saying to myself, I may be different than the average bear. If I'm saying to myself, that's where the market is most likely to go based on my indicators, and it hits it and it doesn't fill, I will almost instantly protect my position. Almost instantly protect my position, because why was I going to take profits there? Because that's likely. So guys, it's okay. If it doesn't fill, you don't have to let it become a loser. You can if you want, but you don't have to. And this is the chili dog, my friends. The chili dog. Thank you, Ron C. Why? Because it makes just enough money to buy a chili dog. When you have momentum on the large chart, when there's nothing in the way on the large chart, when you have momentum on the small chart, Ron said, you know what, Mark? I learned your trend trade. I understand momentum. I get the clear path. I know lines are bouncy. I'm going to jump the fudge in. And I'm going to try and make about 110 bucks a contract. And I'm going to do that 5 or 6 times a day. And then I'm going to go to the beach and I'm going to eat chili dogs. And this is such a great trade. And a lot of you have latched onto it. So when you're sending out Christmas cards this year, I expect Ron to be on your Christmas card. Pete says, oh, that's that trade Ron made up. I can do the same thing because I paid attention, because I love momentum, because I'm 100% into clear paths. What a wonderful way. For those of you on TradingView, I'm just going to tell you, I haven't really found a way to make this work consistently. The bar structure doesn't support it the way it does on NinjaTrader. There's the same trade going the other direction. Momentum, room to trouble, momentum, room to trouble, clears things that could make a bounce, and just quick profits. Base hits pay bills. Base hits pay bills. Ron putting on a clinic this morning. Great job. Miss Adriana, 50-50, no divergence. So what is she saying? She's saying, check it out. This termination condition reversed the market. That's a strong top. This is the best momentum ever. I love it. 3 triggers are through. It just keeps getting better. I've got all the momentum and nothing in the way and the perfect entry, and I'm going to get paid at trouble. And then she's out when the divergence prints from trouble. And guys, this is perfect execution of the potential to break. Getting in with the lowest risk possible, getting paid at the first sign of trouble, and refusing to give money back on a trade that's based on potential. Great job, Adriana. Same look, 2 triggers through. I watched this one set up this morning. Large triggers were a full bar away. You guys that studied know that price is likely to close the gap to those triggers, which means that you didn't get it at a mid-band, you didn't get it at a fib, you waited for the close. Waited for it to close that gap to the large triggers. Adriana gets in, gets out at trouble because that fib printed, and actually trouble held it pretty good, and I think it went down. Once again, great management on the potential to break. Great job, Adriana. I watched this trade set up and almost took this one, and then I realized the gap theory the same way you did, and I was like, oh, that's not my trade, and sure enough, it came right back down. Great job, Miss Adriana. Market reverses out of nowhere, triggers rolled, odds favorable momentum, breaks below, and this is kind of cool because if this momentum trade doesn't just run, it's likely to turn into one of those medium probability trend trades. And he had an order waiting, but there was too much pushing the market down, and he just had to make some money on 2 contracts instead of 4. What a horrible way to live life, Pete. Ugh. Telling you guys, when you learn how to use the software, smaller winners are going to piss you off. You're like, the software is so good. Why did I only make $200 to $300 on that trade? It's fun when that happens. All right, let's see what we have. Weak bottom, not a lot of momentum, medium probability. It's a beautiful look on the small chart, right? You do have a clear path, Jen. The small triggers are strong. The large triggers are trying, but not there yet. Your entry is so well defined. And just quick profits on a medium probability. Absolutely beautiful execution, Jen. Absolutely beautiful execution. Knowing what's working against you and choosing to take it and manage it. And I think that's what sets us apart, is the ability to do that. Little bit of chart reading goes a long way. Papa, was that 2 charts or 1 chart that you posted? Let me see. I think it was 2. I don't want to miss one. Something about the coach. He's a jackass. But he's pretty good at reading indicators. All right, here we go. All the momentum. Room to trouble. Clear the bouncy thing. Make some money. Pete, you are boring. Pete's like, seriously, momentum and room to trouble. Let's just jump in, make a couple hundred. We'll make a couple hundred later too. There's something to be said for being willing to get paid, guys. Something to be said for willing to get paid. Did you know that your account doesn't know if you reach $1,000 on the day, $100 at a time, or in only 2 trades? It has no idea. Good momentum. 3 triggers through. Pink 1-to-1s, lots of resistance. Trade would have not had, perfect trade would not have had the termination, but it was. Loss of 250. So Adam, medium probability. You're coming from, it's weird. It's not really a strong top. It's a great look on the large chart. Your entry makes sense. One of the challenges on this one, Adam, are you with me? And I don't even know that it was a challenge on this one. I'm looking for strong triggers on the small chart, and it looks like you even had strong triggers on the small chart. Those, it's hard to tell because it got locked in behind a fib, but it looks like you even had separation between the small and large, no divergence, um, identifiable entry, and smart stop. Adam, I think what you took here is a good loser. And it's hard to say good loser, right? It's a good trade that just didn't win. Lower divergence, all the momentum, 3 triggers through, perfect entry, stop makes sense. The Sons of Guns just wanted to push up a little bit. I can't find a fault. You had more going with you than against you? I think very much so, Adam. And to be honest with you, we could defend this one in a court of law on the KISS plan. Strong top, market pulls back, second lower, and there were fibs everywhere up there. You just don't have them on this chart. All the momentum, 3 triggers through, no divergence, strong triggers, perfect entry, beautiful stop. I mean, this is literally, if you're gonna take a medium probability trade, that's about the best way to take it. So shake that one off and just wait for the next one, because when you have strong triggers, when there's room to trouble, when there's a pullback to an area inside of triggers, the market tends to be pretty forgiving. Great trade, Adam. Great trade. And here's the cool thing, Adam. It doesn't have to be a good bottom because it's not a medium probability trade. Does that make sense? It doesn't have to be a good bottom because it's not a 50-50. It's not the potential to break. It's literally a clear path. And Adam, this is what we call the apology trade. We're going to take his money, make him think the market's going down. But after we take his money, we're going to like, dude, Adam, sorry, seriously. Here's a great entry with very low risk, and we're going to get you all the way to the promised land. So you're up 50. And both of these are beautiful. Great trades. Great trades. All right, jump the fudge in trade. The trend is down. Weak side of the triggers, room to targets. It's coming off of those termination conditions. Price pulls back to support. You catch it on the way up. And then, Victor, this is support 100%. So you have all the momentum from support. I guess it's counter trend since those triggers are down, but you're coming from the termination. 83, you had a couple ticks to get to trouble, and you made it to trouble. Nice trade, Victor. Aaron, let's see what we have. Weak momentum, clear path, room to trouble. Initially, I planned my entry off the midband, but looking back, I didn't have an area. I thought it might not reach that high based on 2 previous pullbacks, but the market ended up completely reversing. I know triggers aren't beautiful, anything can happen, but I thought it was one of those moments where the market just keeps going. So, Aaron, how'd your opinion do for you on that one? My opinion sucks. I'm going to tell you right now, guys. My opinion does not serve me well. So, Aaron, you remember the lesson from yesterday? Area inside of triggers? If you were going to take a shot at this bad boy, that would really be a requirement for me. Without the momentum, I want to latch on to the other 2 advantages. And that's one of the reasons why we talk about the advantages so much with you guys. Because if the perfect trade is these 3 bad boys right here, not having the best momentum isn't a deal breaker, but what it means is that I'm going to lean heavily on these 2. And they better be there and they better be solid. And then when this one goes away too, a clear path it's hard to make a living on nothing but a clear path when there's nothing to push it and nothing to bounce from. So, Aaron, I like the thought process. When you say things like, because of what happened before, it means that you didn't take the trade, right? And I thought this was going to be one of those times when the market is just going to be going down. And man, When you shift the focus from what you think to what your indicators say, from what you think to what the rules say, it keeps you out of these. So now we got to go find a brilliant trade to make up for that loss. Triggers down, clear path, and now we've got the area inside of triggers, Aaron, and I'll be damned. You made money, and then you got stopped out right at the area inside of triggers, right at the best entry. Does that make sense? Perfect entry, nothing changed, and you got stopped out right at the perfect entry. Great job, though, dude. And see the difference? Not the best momentum, but because you can define that entry, it really does, man. It takes a lot of the stress out. That is what we call a great recovery, my friend. Had my stop too tight, moved it because first target was met, and that's okay. If your plan says go break even after the first target is reached, that's cool. You did it perfect. It just wasn't your money. What I'm excited about, Aaron, is that you defined the entry perfect. And that has been the one that's been getting away from you. So I think it's pretty rad that you pulled that one off. Good job. Strong side, nothing but room, pulls back to the area, closes above, prairie dog at resistance, right, Jen? But because of the large chart, giddy up, let's go. This is an area of resistance, and I don't know if it was there or not. And guys, just because I say it's a prairie dog doesn't mean that it's not your trade. Do you know it's your trade? Do you know it's a prairie dog and not support? That's all I want to know, because it means that if stuff starts to go wrong, you're like, well, I did trade from an area of resistance. But with that look on the large chart, Jen, it's going to be hard to stop, right? Strong side, I love it. Great job. All right, trend is up, strong side, room to trouble. Resistance becomes support, closes above, and it looks like, correct me if I'm wrong, Papa, it looks like you traded directly into the outer band. Is that right? Right there at about 61, 62. So one of the areas that can stop forward motion is an outer band. And you want to make sure you have room for it. Everything is spot on, except room to targets on the big chart. And man, that bad boy created a bounce. Does that make sense? These outer bands don't always make people's rate. Sure why, but it's pretty common, and it's very avoidable. So everything is perfect except for that one darn line. And that line pushes it lower, right? Right off the outer band. And then you get the close above. I believe that was Jen's prairie dog. And that's the one that went up. But with room and nothing in the way, it's always easier for that market to move forward. Good job. One of the things that you've done is you've really latched onto those rules in the last week or two, Papa. And I can see it. All right, Nathan, little language thing. Anything low will be a bottom. Anything high will be a top. That's okay. I did that so much in the beginning, but I was with you. So is that a weak top? Technically, yes. It's a reversal that comes from the middle of nowhere. But look at what preceded it. That was your strong top. And that's the tone setter. That was the top of the move. And look at what happened as the market came down. They push down, 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 down. And then they try to fight. And you notice that the small triggers never get above the large triggers. Do you notice that the large triggers never even roll up? And then it starts pushing down again? So second lower divergence is not a strong top, but it is a good look for more push down. But your strong top started over here, and that was a complete failure by the buyers. You're overthinking it. Put it in context with a trade. You're putting a lot of stock in strong tops or bottoms right now. A lot of stock in strong tops or bottoms. They're great. But I don't see momentum in a clear path anywhere after it, right? Except for that one right there. And that one failed. That was a medium probability, the perfect medium probability that failed. Right on. So one of the things about a strong top is it helps break this area. There's a point, everybody in the room, not just Nathan, that if you are 18 points away from that strong top, there's already been all the fights and fluctuations, strong top's done its job. Does that make sense? Like strong top probably got us through this fib. And then we kind of reset as it heads back down. I've seen people, and I say it because I've seen people take trades like a 50-50 up here, and they go, well, I had a strong bottom. Well, you did, and it broke 1, 2, 3, 4, 5, 6, 7, 8 areas. There's a point where it doesn't do any good anymore, and I think that's it. That was a good-looking trade if you took it, Nathan. It really was. It just didn't work, and then that was the apology to get you back up. And then it comes down to support. There's that gap theory again. Look what it does. Closes the gap all the way to those triggers, retests resistance, and now everything is aiming down. And that's your strong top, Nathan, which means that a 50-50 trade here with the rules met has a better chance of winning. Good stuff, man. Great question. Thank you for that. What's up, Gino? Gino's coming in to brag, I guarantee it. Yeah, he is. Gino's like, nobody's hugged me in a day. Check it out, guys. I'm going to show one chart, no large chart, divergence, and I get in and I make a lot of money. And that's what you do when you have rules. Nice job, Gino. I don't know what he did. This would be the post in the room. Guys, you can do it too if you have a plan. 73 points on the NASDAQ. What is that, like $3,600? That's green fees, Gino. Nice job. Of course, you guys are under a whole lot of snow, so maybe not green fees. So 3 triggers through, strong top, strong triggers, no divergence, mid-band's not behaving as a termination. Could you guys justify a short trade off of this mid-band, understanding fully that your stop has to go above these triggers? What do you think? And it's still in the retracement zone. We'll see what it does. You're missing fibs, Nathan. It's a lot of risk, isn't it? It's a lot of risk. So what's one way to mitigate it? I guess you could wait for a reversal bar, right, Pete? But does it fit the rules? That's my only question. Does it fit the rules? Strong top, 3 triggers through, no, it's potential to break, no divergence, strong triggers, pull back to the area, stop where the market shouldn't go. It fits the plan 100%. It doesn't mean that it'll win. And Pete's right. It's $150 a contract. You have to be okay with that. But it does fit the rules. And that's what's important. Nathan, I need you to do something for me. You're missing Fibonacci. Like you've got this fib right here should be right here. Because the way the fibs come together is you've got 3 time frames of fibs on this chart. I don't see any native. And then this is your 13.2, and your 13.2 is not there. And that's the one that would have kept you out of this trade probably. Without it, it's a beautiful look. But with it, it changes the whole dynamic. So try this first. Just go to your chart and click on it and click F5. And what that'll do is that'll reload the Ninja script. All right, they made it to the top of the retracement zone. If this is really going to be a top, this is the best spot to go down. And if they want to push up more, guess what? I'm going to get stopped out. I don't care. It's simulator. It followed the rules. That's my only concern, is does it follow the rules? No. Yeah. Do you guys get nervous when I trade and it's about to lose? You're like, oh my gosh. I just don't care. It's simulator. Did it fit the rules? Was it momentum? Absolutely. Was it the potential to break? For sure. Was it a strong top? 100%. Was it a pullback to an area inside of triggers? Without question. Got a better chance of winning this one than losing. Doesn't mean that I won't lose it. I'm a tick away from losing it. Oh, there we go. Ta-da! So now my job would be to take the picture, to annotate it, to go back to my rules, to make sure I didn't miss something, and see if it was a good loser. And guys, I'm going to tell you right now, it was a good loser. Strong trending, there's that pretty tracks, right? Pull back to the mid band, get in with confirmation, and then that second lower divergence. Ugh. Stupid second lower divergence. Sorry I missed that one, Pete. Since I say you never post losers, I'll show him. And you're absolutely right. That second lower divergence is the kiss of death on that one. On the automated system, guys, this is an exit condition. So if you do get your entry, and this wouldn't have even been an entry on the automated system, it'll pull you out on the second divergence, the second lower divergence. It'll pull your guts out of the equation, which is pretty awesome. And now we've got a pivot stop out, right? And guys, look at that. Flat triggers, second higher divergence, nothing through resistance. Man, they don't know what they want to do. I'm going to force them to go one direction or the other. Give me my rules met. Crude oil, weak bottom, hits resistance, pulls back to support, all the triggers are up. Now it's a strong bottom. Fib update got rid of a lot of trouble. We'll see what happens. Pablo, triggers, strong side, room to trouble. Pull back to the area. There's your close above. There's your entry. There's your profit right at the large chart trouble. Who are you? Man, great patience on that entry too, Pablo. I know that was killing you. You're like, go, go, I gotta go, I need to go. And then, bam. Bad mother sucker. Is that really? That's a 20-point trade, Pablo? 47.75 to 67.75. That's a hell of a trade, my friend. Nicely done. Fits the plan perfectly, doesn't it? No way, Cav. You just got to wait for it. For you guys that don't know, I've been nagging the crap out of Pablo for 6 months. Uh-oh. Uh-oh. Trina says anything boys can do, stinky boys, girls can do better. Was it worth the wait, Trina? The triggers are up. You're in transition. It's the perfect pullback. It's a beautiful entry. And life is good. And that's 40 points. And Pablo beat you by 2 ticks. That son of a gun. But how cool is that? Trina's in Alabama and Pablo's in Washington. And Trina has a background. She's a world traveler, spy, and solved mysteries with those teenagers. And Pablo was a hip-hop dancer for MC Hammer back in the 70s. And they took the same trade. Because it's just methodology. It's just patterns. Termination condition, yellow 1-to-1s. Stop over, pivot, 1-to-1s. All right, so small triggers, really not below the large on this one, Phil. They're threatening, but there's no way that they could have been. And that's okay, but it's that little subtle thing. And it does push up. And then you get the open below the HVA. Now the small triggers are below. It opens below the HVA line, and you take it down to trouble. Nice job. You didn't enter at the HVA line. You entered with the close below. Nicely done. Nice recovery. And isn't it funny how it's so subtle, the difference between the one that works and the one that doesn't? I mean, it's such a minute difference, but it's such an important difference. The rules really aren't very vague. They're pretty specific. Strong triggers, clear path, momentum. Does that touch count? You better believe it counts. You better believe it counts, Papa. It hit that area, and it just forced you into a little bit of patience until they were ready to go. And then that's your entry. And that was your target. Does that make sense, Papa? So a lot of times you may get it. You may get the touch, and it might be 4, 5, 6 bars until you actually get an entry. And it gave you the perfect entry. But it touched the zone as well, didn't it? Do you see it? It wasn't just the HVA. It touched the zone as well. And remember that these are zones. So you could, and this is, I like exactness, right? So that's exactly the zone right there. Since it's a zone, could we do that and not feel like we're fudging rules too much? Like, it's a tick above, a tick below. It is a zone. It's the perfect trade. And then, Papa, with the HVA supporting it, it's an even better trade. Because now not only is an area that's been proven to be support, it is also the highest volume of buyers that created the first push up. And that's like bonus warm fuzzies. Great read. Boaz, momentum, 3 triggers. Wait for the up bar, especially with 2 divergences. And easy money all the way to the fib. Nice trade, Boaz. Nice trade. Man, I waited all morning for a NASDAQ trade. Didn't get one. I took a page out of Trina's book and traded gold last night. Oh my gosh, gold is psychotic. I don't know how you guys do it. There we go. Now we've got the look, Nathan. And doesn't it look like a totally different trade? But that's good, though, because it's better to learn this lesson now than later. And now suddenly it's 2 triggers through. One of the things that I'll do, and you don't even have to F5, if I look here and see a line, it should be here. And if it's not, that's when I'll F5. So you should have, so there's 73, there's 73, there's 83. So now you're working with everything. And the workspaces are built to make sure that you have all 3 time frames of fibs on there, because they're all important. They really are. All right, there's your strong bottom, right? There's your odds favorable. Not quite 3 triggers through yet. We definitely have areas inside of triggers. I'm like a couple ticks away from having my rules met. You guys may have a different idea on it. But we've made it through all the pictures, guys. Good job. So what does this say? This says up, strong side of triggers. We're above the outer band. And here's one of those times where you're like, okay, My trigger's rolled. There's my area. From this area, would we have room to get back to the one-to-ones? What do you think? I think we would. So now the weight is on. Adam P, terminations are defined on the large chart. Terminations are defined on the large chart. Is the generic answer there. And it's not uncommon, Adam. Let me find the picture. I've got pictures for everything. It's not uncommon. Was that it? Nope. Hold on. Let me find my picture for you. There we go. It's not uncommon at all to see one-to-ones create the bounce that we need to get back. That's okay. And this is why we teach momentum and path first. Because, Adam, when you get in the habit of allowing the large chart to define momentum and path, you're less likely to be scared out of trades because you see these one-to-ones. You're less likely to panic because there's a divergence there. When the large chart is perfect, it takes really 3 divergences on the small chart. And that's my only small chart termination, is 3 divergences on the perfect trade. So right now I've got momentum. I've got a clear path. I've got an area inside of triggers. The only thing that could make me cancel this order would be 3 divergences in the same price range. Everything else is inconsequential because I've got momentum and path. Does that make sense? That's a pretty good look, guys. This is about as good as it gets. You're already in it, Pete? Nice. And for you guys that don't chili dog it, you're hoping for a pullback, and Pete's hoping that it doesn't. Pete's like, I don't care about these mofos. I want them to get to those one-to-ones. And the rest of us are like, please give us a pullback before you hit those one-to-ones. Adam, that was one of my biggest things when I first started out. And guys, I'm not opposed to telling you guys what kept me out of trades. One of the things that might have kept me out of a trade, let's see if we can just find like a look. The perfect trade. And I would say up, the small triggers turned up. And then John here, let me get you the picture that has a couple of these examples. Here we go. So Adam, I'm going to just give you insight into my life. That's it. I'm not suggesting that my path is your path. When this chart is perfect, I would say, damn yellow one-to-ones, and I'd skip the trade. And I would post it in the room, and John Novak would say, hey, Mark, momentum and path is defined on the large chart. These yellow one-to-ones gave you the perfect bounce back. And I'm like, okay, fine. And the reason I was doing it, Adam, and everybody else listening, the reason I was doing it is I was overcompensating for my fear of losing. I was looking for reasons to stay out of a trade. That's a termination. I can't take this trade. Those small triggers rolled against me. I can't take that trade. And I would do this. And Adam, I don't know if that's what you're doing, but I found myself talking myself out of the absolute perfect trade over and over and over. Because if you're not in it, you can't lose, right, Adam? If you're not in a trade, you can't lose a trade. If I don't ask the girl out, she can't say no. And I think that you get to a point where you're so into the advantages here that you're like, F them. They're going to have to run me over if they want my money. Because when this chart looks like this, dollars to donuts. I love that phrase. They're going to find a way to at least hit those one-to-ones. When it looks like this, they're going to be hard-pressed not to get to that fib. So all the entry chart is it's a way to just say, golly, I'll just jump in. right? Some of you may do that. I'll just jump in. Pete loves it. I've got momentum. There's nothing in the way. I see where trouble is. We're not there yet. Hell, let's see if they get there. And if they do, awesome. And if they don't, I'll just look for a trade lower. But you see how the large chart says giddy up, the small chart says giddy up? Everything says the market's more likely to go up than down. This is what that chili dog looks like. This is where you guys just say, F it, I'm going to jump in. The challenge is, where does this trade fail? A reversal bar is where that trade fails. Because when I get a reversal bar, that market's likely to push lower. And since I don't have any areas inside of triggers, I don't know how much lower it's going to push. Does that make sense? Taking the idea of momentum and path, if you just jump the fudge in, you've got to be able to think ahead. Will it turn into a trend trade? Shit, rule number 3 is not met. I'm not going to leave that much risk on it. Pete would say, if these areas were inside of triggers, Pete would say, F it, come back to the area inside of triggers with this look. I'll keep my stop down here and won't sweat it for a second because trend trade rules are met. I say trend trade rules aren't met. I'll take a tiny little hickey. We'll come back and see what it did. I'm not telling you guys to just jump the fudge in, but if you have reasons, you'll be floored at what you can come up with. Momentum, you're playing the strong trending market game. I like it. There's your pullback. Missed your trade, not your money. And Boaz, good luck, right? Pretty darn good look there. Boaz, can I share something with you that I have noticed in my own trading that costs me more money than makes? Because you and I both trade the NASDAQ, and you and I both like a good confirmation bar. This is one of the things that I've noticed. And guys, this isn't a rule. This isn't in the Nexgen literature. This is literally me saying in my own personal trading, this is a pattern that I've recognized that has cost me. If the reversal bar I use for confirmation is directly into a fib, Boaz, I'm losing more of those than I'm winning. And I don't know why. And this one's on the other side of it. But if the reversal bar marker is right on that fib, I'm losing more than I'm winning. And I don't know, you can go back and do some study on it if you want. That was a good look. And look at that. Better to take a small loss than to hope. The entry bar, Nathan. So Nathan asks, Mark, when you move your stop 2 ticks above or below, do you just pick a random wick, or do you use the entry bar? It's the entry bar itself. And let me show you why, Nathan. Let me show you why. Let's find a good look. Here we go. That's okay. So check it out. Here, let's just do it this way. Boom, 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 boom. Don't even pay attention to the large chart. There's nobody behind the curtain. All right. So we're looking for a long trade, right, Nathan? This is how I want you to think about it. Buyers in control. Cool? Looking for a long trade. Buyers are in control. I'm going to turn this into one picture. Come boom, 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 boom. Seller's fight gets me back to my entry. You with me so far? So first, the buyers are in control. And then the sellers fight, and it gets me back to my entry. Boom, 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 boom. Sellers lost, failed. at my entry. When the bar goes up, when the reversal bar prints from a rules-based entry, that is the buyers taking back over. So my stop, Nathan, will go just below where the sellers failed. Does that make sense? And that's kind of the idea on stop placement, is that our entries require that fight. So it's under the part where the up bar turns green. So it's a reversal bar. There's your reversal bar down that starts the fight. There's your reversal bar up that signifies that the fight was lost. So what we're doing is your initial stop is over here below the triggers where the market shouldn't go, right? We define that as where the market shouldn't go. And then once the buyers take over, we redefine where the market shouldn't go because we can visually see that the opposing force lost their fight. No, it's 2 ticks below the reversal bar in the direction of your trade. 2 ticks below the reversal bar in the direction of your trade. We're not picking wicks or anything like that. It's literally 2 ticks below the bar in the direction of your trade. Guys, this is why if you just jump the fudge in, it's okay to take the small loss. They're still pushing down. They're still pushing down. And this is why you don't wait for the end of the move. All the momentum, nothing in the way, jump in, and you get real close to trouble, and Ron says, I'm not giving it all back. So this is like a sacrifice bunt. You got the guy to second. Nice job. Good question, Nathan. Thank you for that. And guys, once you get that reversal bar, that's the fight. Here it comes. No areas inside of triggers. Aaron 1, do you see it? Aaron 11. Rule number 3 is not defined. What does that mean? I don't know if it's going to be this, or could it possibly be that area? Could it even be that area? Sorry, Pete. Momentum and path, jump in, jump out. Just kidding. Yeah, momentum and path, jump in, jump out. And look how Pete gets above the bouncy thing. That's the key. I jumped in way the hell up here. Pete says, as soon as I get past something that can create a bounce, I'm in. And I'm taking quick profits. And Pete, way better execution than me. Aaron, purple 1-to-1s don't mean anything. I took them off the chart. They don't mean anything. When we talk about areas, we don't talk about purple 1-to-1s. When we talk about entry points, we don't talk about purple 1-to-1s. Purple 1-to-1s only work their way in if you're a NASDAQ trader. That's it. They're on the chart because there are people that use them. But don't worry about them. I could put mine back on. It wouldn't change the trade. I don't know where the market's going to go back up. You'll right-click and go to Indicators, T3 Fibs Pro Trader, and where it says 1-to-1 small swing, just make them transparent. That's what I did. And do it on both charts and click Save. And Pete, it might make it to that bottom line, right? Yeah, that's okay. So Aaron, I know that I tend to abandon language a lot. But I actually give you the list every day. Every day I say Fibonacci support or resistance, yellow 1-to-1s or mid-band. And I've started adding in, Aaron, because nobody reads this, that divergence highs and lows are not entry points. That pink 1-to-1s are not entry points. We're going to watch this one and see what happens. Pete says if that mid-band gets in there, he's willing to take this trade. Because if the mid-band's in there, it fits his rules. It may not even make it, Pete. I don't know. We'll see. What do you think? Little push up, bounce off the small triggers, second lower divergence, come down to 06, 07, and then finish the move up to 21? Let's see. Or maybe they just run. Maybe they just run. Uh-oh. Mind blown. That's funny, Nathan. I don't know why John has them in there still, to be honest with you. I think that one of the things John Novak does is he tries to not have to make 75 workspaces for everybody's preferences. So he puts them all on there. Yeah, large chart hasn't changed a bit. It's still momentum up. It's still clear path. Whoops. There's the hit to the small triggers, divergence high. Let's see what they do. I didn't get entry rules met because I didn't have an area inside of triggers. This would be a good spot if the sellers are going to fight right there at those small triggers, right there at that divergence high. If the sellers want to push it lower, that's a pretty good spot. Doesn't mean they have to, but if I decided to enter this market, maybe on a reversal bar, my eyes are open right here. Boy, look at that large chart. Momentum and path. How would we feel about a pullback to an area inside of triggers now? I'm almost wishing for a push down because I still have momentum and clear path. And the only thing, Adam, 3 divergences in the same price range. 3 divergences in the same price range is the only small chart termination when the large chart is perfect. So I'm really rooting for the small crowd right now. I am hopeful they have just a little bit of fight in them. Does that make sense? Didn't get me the first time. Didn't fit my rules the first time. It's going to take a break, but we should probably ride this one out, huh? They're either going to come get us or they're not. Every indicator on every chart is pointing up. They're probably not coming for me. I'm not in control of that. NASDAQ coming off the outer band. Man, that outer band's been solid, hasn't it? We called the mid band. They didn't quite get there. Maybe that outer band will push it back. We'll see. What do you guys want to talk about? We're going to have an entire hour. Adam, did you get my reply to your email about why did it take the trade into the termination condition? I saw that one this morning. And I don't know if I expressed it right. But there is a way to cheat the settings, not cheat the settings. But if price reaches an area and then comes back 22 ticks, 24 ticks, whatever your settings are, with the conditions met, Adam, there is a way to let it still take that trade to see if they retest. And that may be what you have going on yours. Without actually seeing the settings, though, I don't know. And honestly, John Novak would be able to look at them and discern a lot faster. So Nathan, that would be one way to do it. If you got a second lower divergence here, waiting for a reversal bar tends to be a pretty solid plan. Good job. Because second lower, second higher divergences, regardless of what the time frame is, can create bigger pushes. And that's why a lot of people will elect, if it happens, to just wait for the reversal bar to make sure they don't get run over. And if you never get a reversal bar, is that the best way to do it? Well, I hesitate to say best, right? Nathan, you might dig blondes. Not my thing. So what's best for you may not be the best for me. Well, the KISS plan doesn't have it, Nathan, because that's advanced chart reading. The KISS plan says take your trade and manage it like this as you learn to read your indicators. And then, Nathan, when you learn to read your indicators, you might do something clever, like say, okay, I'm going to add a second lower or higher divergence into my plan. So if I'm in a long trade and I get a second lower divergence, my new plan, Nathan's plan, not the KISS plan, says exit that position, and as long as nothing changes on the large chart, I'll re-enter with a reversal bar. And if you don't get the reversal bar, you don't take the trade, right? The challenge that most people have, Nathan, is that the second divergence prints. Let's see if we can find an example of it. The second divergence, lower divergence prints, and everyone says, oh, but I really want to be in that trade, and I really hope it goes up, right? Second divergence prints, oh, I really want to be in that trade. And you'll get caught in the emotion of wanting to win rather than following your plan. And guys, you see it a lot. And that's one of the reasons, and I can't stress this enough, one of the reasons your entries, if they're based on a checklist, not your emotion, but if you literally say, the only reason I will ever enter a high probability trend trade is if these rules are met. And if they're not met, I'm going to sit on my ass and do nothing. Then you know you've got the best trade every time you take it. And if, what did I do? The only way I will ever enter a 50-50 trade is if these rules are met. And if they're not met, I choose not to take it. And that's the hard part, right? And then until you can read your indicators fast enough and create your own plan, Nathan, if I enter the high probability trend trade because my entry is true, this is my management plan that I refuse to deviate from. And what it does is, if you are hell-bent on being pragmatic and emotionless, you will be pragmatic and emotionless. And you're like, I think it might go down, but my rules say stay in. I think it might go up, but my rules stay in, right? And when you let it become that mechanical, it changes your life. And that's where I built this one. Why name your trades? Guys, this is so important. Get your listening ears on. Naming your trades means you know the exact rules, right? So, Nathan, you know that it's only a high probability trend trade if it is momentum, path, and entry. Of course I will. I'm not even sure which ones you want, so I'm just going to keep bombarding the room. But the idea on this one is that the only way I can enter a high probability trend trade, there it is if the checklist is met. So I know exactly what's getting me in. I know the advantages. I know why I'm doing it. And because it has a name, I know exactly how I'll manage it. So initially it's KISS plan, right? And then you grow outside of it and you start adding these other things. And then if I look at my chart, and guys, this is why I'm so hell-bent on you saying it's only the potential. If I say it's a 50-50 potential, I have a different management plan. And where a lot of new users get confused is they take a medium probability trade and they try to manage it like a high probability trade. Or even worse, It's a high probability trade, and they let something stupid like one divergence keep them out of it because they're thinking of the rules on the 50-50 trade. And then a momentum trade has different management. And then an HVA trade has different management. So the more you add to your plate, the more management plans you have to learn as well, right? Ron's chili dog trade is not managed like a high probability trend trade. And a high probability trend trade is not managed like an HVA trade. And this is why I always say, if you keep it simple in the beginning and lean on that simplicity, you don't have a whole lot to think about. This is the S&P. Um, and I know that we all hate that because you're all alphas, right? You're all go-getters. You are all top dogs and producers. And if you tell somebody with that mentality it's better to sit still, it freaks them out. I don't know about you guys. I come from the generation where if you're going to be a ditch digger, be the best damn ditch digger you can be, and you won't be a ditch digger for long. Work harder than everyone around you, and you won't be digging ditches for long. And that's kind of the mentality that I think most of the generation that's approaching trading right now has grown up with. Is the harder you work, the more you're going to receive. And trading is the exact opposite. It's like a golf swing. The harder you swing, the less likely you are to make great contact and send it off into the distance. All right, good stuff. Guys, I'm going to take just a minute. I'm going to close that out, but if it happens, cool. I'll be back in just a moment. And if you guys need anything, post it in the room. If you have a picture, post it in the room. If you have a question, post it in the room. Let's turn this into an awesome discussion for the last hour. I'll see you guys in 5. Remember when I said that lines are bouncy? That's a pretty good example. Kind of crazy how the market can't seem to make a decision right at that pink line, huh? You saw it. You know it's there. Not a bad idea to let things get away from the bouncy stuff. Guys, we're out of pictures. S&P is a little bit stuck. Crude oil's got the same look, right? Momentum, path, no area inside of triggers. S&P still stuck at the line. If they push down, there's a spot. NASDAQ is up. We're getting into that weak transition side. Nothing but trouble. And we really just need that small crowd to show up and give us a little bit of a push. And until it happens, there's just nothing to do. Which means that if you want to get the most out of this classroom, ask a question. Post a picture. What's on your mind? Nothing's off limits except politics and religion. This is where I lose patience and jump the fudge in on the ES and get mad at myself, so that's why I wrote it, so don't. I like it, Jen. You have too many questions, Jennick? Well, Jen, just post one. Let's have a talk. And let me ask, do you have the T3 indicators? Are you on demo with us? It's easier when you have that demo. You can look at it and play with it, but ask a question. Let's see. Did you show my page with the momentum trade option? Boaz, did I miss one? I'm sorry, I never do it on purpose. Let me scroll up. Was it that one? Nope, we talked about that one. Was it this one? That was it. I'm sorry, Boaz. Here we go. All the momentum, potential to break, price breaks above trouble with strong triggers, and snaps right back to the fib. That's the perfect momentum trade, Boaz. All the momentum, potential to break above resistance, come back to it as support with strong triggers, and just straight line. I mean, that's textbook, man. I can't find a darn thing wrong with that. Why would you trade blind, Jennick? I get it. Not everybody wants to have an advantage. But if you're not trading the Nexgen indicators, can't really give you any trading advice. The only advice I could give you, are you on TradingView, my friend? Cool. Why not sign up for a demo? Why not get the T3 indicators? Why not take a week of learning that basic trend trade and having your mind freaking blown? And then pony up for the edge, man. That's the thing, is nobody wants to invest in the tools because there's so many assholes out there that are ripping people off. And I know there are. There's a lot of jerk faces in the trading world, guys. Nexgen's been doing this for nearly 30 years. You don't achieve that kind of longevity not doing things right. Look at that. All the momentum. Nothing in the way. Jump the fudge in. Make some money. Nice job, Pete. No worries. I'll hand you everything you need to test it. TradingView has replay. Jennick, you're not going to be a pro trader in a week, right? You've been in my class for the last 2 weeks, if I'm not mistaken. I'm going to sound a little cocky real quick, and I hope that you don't take this the wrong way. But if you've sat in my class for 2 weeks and you haven't figured out that what I teach on a daily basis is nothing short of kick ass, you're not paying attention, right? You know the software works. What I need you to do is get it so that you can learn to work it. And that's okay. I'm ready when you are, man. But you don't need to be in front of the market all day, every day testing it. You know it works. You just need to learn the patterns and rock it out. And it will be, man, open arms is what we have for you. So Aaron, just curious, but why does the purple 1-to-1s matter on the NASDAQ? What's the difference between the purple and yellow 1-to-1s? Good question. So let me close this out. I'm going to show you exactly what it is. These yellow 1-to-1s, the market has to do this, and then it has to do this. Get over here. And now I'm lagging a little bit. There we go. And then once this happens, so we'll call it A and B and C. And my buddy Jerry told me that this is Elliott wave, and I've never studied Elliott wave. So the distance, this is your recipe for big ones, Aaron. The distance from A to B, and then when B goes down to C and creates that pivot, your software creates an equidistance to D. And that's a lot, right? And I'm not very technical. But what it is it's called a 100% Fibonacci alternate. So this distance right here is the same distance right there. And this is huge in institutional trading. This is why we use the yellow 1-to-1s, because they're taken from bigger moves. Now those pink 1-to-1s, let's see if I have them here. Pink 1-to-1s are taken from much smaller moves. And if you look at on the big chart, not very impactful. Here it corresponded. Here you had big 1-to-1s and a fib and a divergence low. A little bit before, hanging in the middle of nowhere, kind of doing nothing, didn't have any impact. It had a fib, but they blew right through the 1-to-1s. So those small swing 1-to-1s are just big swing 1-to-1s on a smaller scale. And because they're on that smaller scale on something like crude oil or the S&P, they're not as significant. And look, they just flattened, run right over. But the NASDAQ, boom, 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 boom. The NASDAQ workspace is a 34.5 for your large chart, which means you are 3 times bigger than the large chart on S&P or crude oil, which means that these small swing 1-to-1s are from a pretty freaking big move. Does that make sense? So you can use them if you want. True story. You can use them all day long if you want. But I think what you'll find is that on the what happens more often than it doesn't scale, these pink 1-to-1s turn out to be pretty insignificant on crude oil or the S&P, so much so that I don't really include them into the lessons as far as areas that can stop the market or create bounces and stuff like that. I will tell you, if you're doing that jump the fudge in, if you're doing that trade where all you do is just hop into the market, hoping stuff works out, I'd pay attention to every line. I wouldn't even risk it. Good question, Aaron. Cav says there's, for some of us who have been here for 8 years, the professionalism. Appreciate that. John and I never thought anyone would say that. You're welcome. Did it? So it can every now and then, right? It can every now and then, Aaron, but does it do it more often than it doesn't? That's always the question with trading, and I like that. But go back and see how many times those pink 1-to-1s create a tradable area for entry. And what you'll find, and I know this because I've done the research, which is why I speak so confidently on them not being necessary. We'll get one in here. We'll get them back on the small chart. You look at them on your trades, Ron. Yeah, when you're just jumping in, give yourself every advantage on anything that even has the slightest potential to create a bounce. We'll let this calculate real quick. But when we went through the entry pattern, what we found is that the pink 1-to-1s are not reliable. Here they were, right? It worked. There it worked. There it blew right through them. Here they're with fibs. So, but in that small, see the chop? See how they're effective in chop? Because they're based off these tiny little moves. So they show up at all the pivots. Like there's 1-to-1s inside of the triggers, and it blows right through it. Now when they line up, maybe there's a little more impact there. There's 1-to-1s right here. Didn't even begin to make the market stutter. When they line up with a fib, for sure, never made it to that one. So this is kind of what we did is we went back and we're like, okay, are the rules met? Are the 1-to-1s giving us a reliable area of resistance or support to incorporate them into a rule where we want to say this wins more than it doesn't? So this, Aaron, is one of the most damning characteristics of what the market does, right? It went from the 1-to-1, and this is what my brain did, and I'm not saying that yours does this. The one time it goes, I wasn't in it because the rules say they have to be yellow. This sucks. I didn't make money. I hate my rules because, see, I'm just so wound up I can't even type. Because this one time it kept me from a winner. And that's fair, right? And I think that's normal for all of us, is we want to revolve our trading around the one time. Well, I missed out on this one, so now I'm going to use them every time. And then you start losing more than you win. And one of the best examples of that, and Aaron, I'm just going on a tangent here, thank you, is termination conditions. Termination conditions will break from time to time. Termination conditions, you can trade directly into them and make a shit ton of money from time to time. But what happens more often than not? And that's what you've got to look at. What happens more often than not? What does the pattern say? What does the back testing say? What does the time spent recognizing price reaching areas and no triggers breaking? And 70% of the time it results in a loser. So you've got to be willing to let go of the 30% of the time that it created the success that you wished you were having. Does that make sense, everybody? We're like goldfish as traders. Our memory is like 2 seconds long. We remember the good and we file the bad away someplace else. Then Pete, just jump the fudge in and make it because of momentum and path. Yeah, but Mark isn't. Market is silent. I haven't heard that. Good thing I got lungs on me, huh, Tesla? Right on. So Aaron, man, dead horse, right? Every day I show this picture in the room. Every day I define exactly what areas we look for on a large chart and a small chart that can create a bounce. And I do this every day. And I'm not saying that you're not paying attention, but this is where half-truths come to be. If you never took the time to study this picture, you believe these pink 1-to-1s that are on the picture and not addressed are important. Does that make sense? And if you never took the time to learn the entry language, you believe that the areas on the wrong side of triggers are important. And if you never took the time to learn termination conditions, you think a little bit of price getting above a fib creates a clear path. And this is normal. And Aaron, I'm not just addressing you anymore. One of a really big challenge is knowing the words, right? I know what the words say. But do you know what the words mean? Do you really know what it means to have strong triggers, a clear path, and an entry area? And this is how you fix it. This is how you clear up misconceptions, is you take a trade, you take a picture, and you say, hey, Mark, this is how I read the momentum. And if it's a mistake, we'll correct it. And this is how I pick the path. And if it's a mistake, we'll correct it. And we'll always lean back to those core rules, guys. And that's one of the reasons that I lean on language so hard. That's why I lean on language so hard. Your bank ain't letting me pay activation for a whole week now. You need a different bank, motherfucker. How's it going, man? You have 3 banks. Piggy banks. That's weird. I wonder why. Have you called the bank? Just no balances in those 2. Yeah, that's not gonna work. That's not gonna work. Maybe it's an overseas thing. Maybe it's repetitive. Sometimes if you purchase at the same place multiple times, too many times, it looks like fraud. That's yeah. And that's actually a way of your bank keeping you safe, because people will do that with stolen cards. Obviously yours isn't stolen, where they will do 5, 6, 7 small transactions in a row to see if they go through and then hit a big one. And banks have this red flag system in place. That happened to me once. It just takes them a second to realize it's not fraudulent. And usually if you call your bank and get with customer service and go, hey, I know you guys are flagging Nexgen. These are legitimate. I mean to do it. It's a prop firm. I need to make sure that that's approved so I don't get shut out anymore. Usually they can fix it for you on the spot if you talk to customer service. Don't email, don't do the AI chat, but literally get a live body on the phone with you. They ask for 24 hours. Oh, man. Bummer. You guys remember when we said with that look, that's where they were likely to go? Pete knew that. That's why Pete jumped in and got paid up there. You locked in 700 trade if payout today? Right on. Getting payouts is good. I like it. Hey, and I don't know if anyone said it to you. I've noticed how you answer questions over there in the prop firm chat. Appreciate that. Appreciate the effort you put into that, man. Wanted to make sure somebody said it to you. You should get paid. No, because you just asked to get paid. So now it's not a nice deed. Oh, you got to start sending John Novak emails once a week. Hey, John, what's up, man? Need a moderator? Hey, John, what's up? You need someone in tech? Right on. Good stuff, guys. They made it to the term. Don't you do that. He's been kicking my ass for 53 years. I don't need another one. I'm too old to withstand it. Every day, 8 a.m. Dubai. These are up. Those are down. No clear path. No clear path. Not a lot to do here. Not a lot to do here. You want to piss John Novak off, Matafaka? Interrupt his sleep. Interrupt his sleep. Did you not know there was a prop firm chap, Victor? Heck yeah, you guys can go over there, and usually it's just 90% of the people refusing to read directions, asking questions. hey, what are the rules? And then the Autobot gives them a link to the rules. How much can I get paid out? And then the Autobot gives them a link to the payout. John Novak's been saying it for decades, that 90% of men and 50% of women who trade don't read rules. All the answers are there. We have gone to amazing lengths to get you guys everything you need. Jenik, we see you every morning, man, and I'll tell you what, it's good to have you. Good to have you. Gonna change your life one day with the indicators. It's a new generation thing. Yeah. Why wouldn't you, Victor? Yeah, matter of fact, that's a trophy. You don't need a trophy. You passed. That's your victory. That's the victory. That's a gimmick. We give you the best prices, the best drawdown, the best customer support. Do you know the certificates will just get lost? I've got certificates. You want me to change the name on mine? Yeah, 1-to-1s count, Victor, but there's no room to trouble, right? Yeah, that's true. We'll see. The queen bee doesn't dig it, so as long as she's not on board, it's probably not going to happen. I like it when you guys post it. I really do. Here, watch this. Let me see if I can find one from the archives. Not a lot. All right, motherfucker. This is for you. You ready? You can tell everybody. Go flex. I'll build you one. I do see the value in it. It's pretty cool that people hang out, right? No. When I was in college, John's like, what do you want your degree in? We can do it a lot quicker online. You can do anything online. All right, there's your pullback, Victor. That's the one you asked for. There's that outer band. So there's your mid band. And look at that. They're going to do you dirty. They're going to do... No, they're up until they're down, right, Victor? They are up until they're down. The problem is there's just nowhere to go. There's just nowhere to go. We got 8 minutes before those will be down triggers. Day's not over, motherfucker. Day's not over. I got 1-to-1s right up there at 123. I like it. Be smart. We want you guys to do well. We really do. We want you guys to do well. There's a reason why if you're in the trading firm, guys, get on that lease. Get the indicators. Learn the trend trade. It'd be amazing. Heading to sleep until market close. You got to run the giveaway also. Right on, motherfucker. Look at all those shenanigans. Nothing to do. It's 11:38 in the a.m., my friends. Anything we can talk about that could make you a better trader today? Ron, have a good one, man. Anyone that wants to trade and be good at it needs to watch this room before joining any other company. I appreciate that. Gonna go enjoy the heat wave. 34, nice. Oh, thanks, Jim. The class has been good lately. There was a little run where everyone was super quiet. And you guys are starting to come out of the woodwork a little bit and ask some really awesome questions. Unfortunately, I've got 7 million things in my brain. I just need you guys to set it off with a question. Then we're good. And then we're good. Morgan, super excited for the small chart edition. Need to go through and redo your auto settings. Anyway, the current ones work great in December, but have not been on the move for January. John and I right now are working through a lot of settings, Morgan. It's been fun though watching it, and I don't know if you guys, I don't know if you look in traders chat, but like yesterday, where'd it go? And I think this is what's cool. Let me open the link. Bonk, bonk, bonk. Momentum, potential to break, and it literally puts you in on the reversal bar. And then, Nathan, you'll like this one. Second lower divergence prints, and the system pulls you out of the trade. This was just some testing that I posted yesterday. And then the reversal bar gets you back into the trade. And you're there for it to go gangbusters. So you need an ATM. You need an ATM strategy, Morgan. That's the thing that I've been working on, is creating an ATM strategy where it moves stops to break even. I don't know what you're looking at, motherfucker. I have no idea what you're looking at. I don't know how you guys trade like that. It's just different. I'm not saying it's wrong. But I don't understand. Like when I look at Nexgen charts and I look at what you guys do, I feel like you guys are just flying blind. And I know that you have reasons for doing what you do, price action, but golly, I love lines on a chart. Pete's got one. Morgan, so what I've got, and let me pull up a chart. And I'm sorry, Victor, I don't have divergence working on mine anywhere, but I do have an indicator error, which is the divergence potential. So let me reapply it and see if that changes anything. Where are you seeing it, Victor? Large chart? Small chart? Yeah, mine was a little damaged, so I may need to do this. Let me F5 now that I reloaded that one. Maybe it'll show up. Maybe it won't. I don't know. But on the small chart, it still takes 3 divergences, right? And then Morgan, so I created, whoops, an ATM strategy, and Pete has something similar, where what I've done, and Morgan, if you want this, let me know. I'll drop it in for you. So it's order quantity 4, stop loss is 30 across the board. My first 2 come off at 25, and then once I hit, and this is what I put in, once I hit 25 ticks, my other 2 contracts go to break even. And that way I don't have to modify it. So it's either full loss or first profits and break even. And then the second contract is at 40. And then the final one will just chase it. So if it's a giant runner, it works. I don't even know what you're trading. I don't even know what time that is, motherfucker. What time was that? Let's look. Coming right now, Morgan. And then play with it if you need to. I'm not saying that this is the perfect anything. I'm just saying that it's one of the things you can do. Oh, you guys pissed off my dog. Ellie, be good, babe. There you go, Morgan. Yeah, I don't even have a 5-minute motherfucker. So I can't do that. But at 9:50, no, you're trading breakouts. So I didn't have a rule until about 10:05. That's just a breakout right here. It's just a bunch of momentum, but it's different time frames. So they're probably not going to line up. Yeah, Morgan, so that trailing stop is really fast first profits. And here, let's just see. So what it does is it's got the stop, and it's got the first profits. So you show 3, and then if it hits the first one, let's see if they want to push down. It's not the perfect trade, but if they want to push down, they hit the first one. The stop will automatically move to break even and protect, and then when it hits the second one, it'll signal the other ones to start trailing. So it's going to be NinjaTrader 8, templates, ATM strategy, and you'll just drop it. You'll extract it right into there. And Pete has one that 10 ticks. Well, different markets though, Pete. NASDAQ's going to be a little bit bigger, but it's the same concept, right? So let's see if they actually hit our targets. They will, and we can watch it trail. And the coolest thing, Morgan, is that it says cha-ching. So hit my first target. Now I'm break even. If it hits my second target, go. But now I have nothing to lose. So if I'm automated, I've already got money in the bank. I've got nothing to lose if I'm not in front of the computer. There we go. We just hit the third one. So now I'm in chase mode. And if we get a runner here, watch how the stop, my hands are off. And it may not, but if we do get a runner here, the stop will just chase it, Morgan. And it'll say cha-ching every time it moves, which is even better. So you can get in and play with it. That's what I had to do. I didn't know how to build any of this stuff. I wanted something that as I tested, I didn't have to move the stops. I needed to get paid, get to break even, because if you're taking the right trades, it's hard not to hit 100, 150 bucks on the first run, right? When you have momentum, when the path is great, it's difficult to not hit your first contracts. Just get to break even and let everything else work itself out. That's kind of was my thought process on it. And again, I'm not saying that you need this, that you should use this. I'm not saying that it's anything other than the one that I created for me. And I like to share. I don't like to keep things from you guys. I wanted to just drop so that we can watch it chase, but it's not going to do it. But it's pretty cool, Morgan. Have some fun with it. If I can help, I'll help. But that was pretty nice, right? That was Pete's chili dog. Just jump the fudge in and make some money. Yeah, it did, but I think that one had way bigger stops. And now that we're using the small chart, Yeah, now that we're using the smaller chart, I've got my stop set at 30 because if I'm in at a reversal bar, which the new system will do, it gets me in the right spot. Look at that. Close the gap to the triggers, but it's a weak top. No short trades. And then Boaz, if you're listening, if I was thinking about a short, I wouldn't take it here because see how the reversal bar is right on the fib? Eats my lunch every time. Eats my lunch every time. Cavs, stay warm. Stay warm. All right, guys. I guess that's it. I've rambled about as much as I can ramble. So, couple things. If you aren't finding the success you're looking for in the funding company yet, guys, sign up for the demo. Sign up for the demo. Get those T3 indicators. Come be a part of my classroom. If you have the T3 indicators and you're not finding the success you're looking for, I believe that you will find it through simplicity. Looking for the best trades rather than all the trades. Hey, Z-Robot, good to see you, man. And you're welcome. Guys, you can always DM me. If you need something, you can use my email. I try to stay accessible anytime I'm at the computer. The only time I won't answer is if I'm not at the computer. So go enjoy your afternoon. Go enjoy your evening. Trade well. You can email me. Mark Novak at nexgent3.com. And then, guys, I will see you in the morning. You guys take care and be good. Oops.